Okay. You may have come across posts of people bragging about their crazy gains from trading, and you're probably wondering how they do it. How on earth they manage to get those crazy profits in such a short time. I will show you how they do it. Yeah, I'm really sorry to tell you that, but unfortunately, 90% of it is just, not real. Let me use as an example one of the most popular trading channels that was caught faking and editing screenshots. Yeah, when it comes to traders in general, according to research, the percentage of these profitable ranges from 10 to even 1%.
But every day I see so many posts on Reddit with huge profits in just a few weeks.
It cannot be such a small group of people. Well, it is hard to disagree, and in fact, many people make significant profits on the market in a short period of time. There is also a big catch to it, because the same people, after a while, in most cases, post about their huge losses. Do you get it? Do you understand? Let's maybe start with the fact that people who boast about hundreds of % gains in a few months are not traders. They are just gamblers. And this is because obtaining such profits involves using a lot of leverage and consequently risking your account in almost every trade. So it's mostly about luck in this particular case. It looks like this.
Let's go gambling! Oh dang it! What the heck, oh dang it! Oh dang it! Oh dang it! Oh my god!
The story often goes like this. Trader decides to go all in on an asset and luckily manages to make money. Then greed does its job and does not close the position with a large profit, but continues to hold it, hoping for greater profits. He continues to gamble until finally the moment comes when he is completely wrong and the price drops dramatically, dragging down the trader's portfolio balance. This is how, sooner or later, most, if not all, of what he has earned will be eventually lost. Hey guys, listen, I know it's like almost a month after Christmas now, but Merry Christmas and Happy New Year. I hope you're doing well. Be careful, not too careful, obviously. Whatever your plans are, just don't quit. You'll be fine. It's really easy to blow up your account. Sometimes it's enough to literally just, overdo the lot size once, and it can end as well as a magic trick on that guy's stream. People often think that they will cheat the market and change their lives with one trade because it will for sure go into the right direction. The problem is that when something goes wrong, and it often does, they not only lose what they earned earlier, but also, everything else. All it takes is one mistake, wrong entry, missing stop loss, over leverage, and everything goes to hell. The funny thing is that when people see this losses, they still try to do the same thing. They think that this time they will succeed, and they fail because the market does not work as they would like. If you see someone making hundreds of % in a short period of time, it's probably pure luck or lack of risk management, which usually ends in a disaster in the long run. If you play this way, sooner or later the market will remind you where you belong. I lost everything trading on Reddit. Speaking of Reddit, we are on Wall Street Bets, the largest group on Reddit dedicated to trading. Let's check the last sections. Okay, there's a lot of it. First post, and you can already see the pattern I was talking about. I gain a lot and then I lose a lot. Another post, and again my friend had a 30k profit and greed took over, and the result, as you can see, is not quite good. Another guy screwed everything he had into one company and now he's done. But this is not even trading, so let's move on. This one is heavy. Well, losing over $1 million is pretty well done. Investing everything in one meme coin is just... Here's a nice one too. He made a lot of money on SPY and without risk control it ended not quite well. Let's see. Oh, sick. He opened it a short without any stop loss and lost over 100k. Okay, but let's jump to the bright side. Okay, gains. First post and what's immediately obvious is just how much gambling these people are doing. Over $1 million profit in a week, all at once. Again, like I said. This one I will just skip. It's not even that bad here. Relatively slow capital growth. But here is a beautiful example of f***ing up everything you have at once. 12,000% profit. Nice. Sooner or later, we'll see here some upside down results, what I call them. A similar situation to the previous ones. Well, listen, you can clearly see what such a vicious gambler circle looks like. A lot of profit and risking everything and then losing not only what you gained, but also all your capital. If you want to take care of your wallet and probably sleep better, you have many different options to control your risk. You can use stop loss, probably the most popular and known form of risk control. If used correctly, it fulfills its function quite well. The important thing is that if you use it when trading on supports and resistances, you should pay attention to whether you set it below the zone and below the last low or top. This won't give you 100% efficiency, but it can prevent some random closing of the position when the price moves more rapidly. Hedging. Hey, I already talked about this. DCA, dollar cost averaging, a more risky form of risk management because it involves constantly adding new positions with the same lot size regardless of the price that it can trade. In my opinion, this may make sense if the price has been rising or falling rapidly for an extended period of time without a clear correction. In such situation, there is a greater probability that the price will reverse for some time and this strategy can bring significant profits. The main problem with this strategy is that if the price does not reverse, and this sometimes happens, blowing up the account is almost guaranteed. Reversing positions. A useful way to limit losses if you are holding a buy position, for example, and the price has dropped to such a level that you are quite sure that it will not return into the right direction. Then this option makes much more sense. The downside, however, is that if you are wrong and the price reverses, which happens more often than you might think, you lose even more. If I had to say which one of these methods is best, I would say it depends on the context. Personally, I think it's best to mix them and use the one that seems the best at the moment. To avoid leaving you with the most boring ass answer to this question, I have some examples. If I open a position at support and I don't see a place nearby where the price could reverse, I will consider a stop loss or a position reversal. However, if I have several nearby support zones, I will consider combining hedging and DCA. Hedging below resistance and using DCA at the next support. These are of course just examples, and unfortunately trading does not work in a way that I would do it in every situation. Just, a lot depends. If you are seriously interested in trading, then I have to throw a bucket of cold water on you because there is no way to do without it. Here's the thing, you will probably never be profitable. Yeah, you heard me right. Never. It may seem strange that a guy with a channel dedicated to trading, instead of encouraging you, tells you to give it up. The statistics are clear. Only 5% of traders make profits. In some studies, these numbers are even more brutal. 3%, maybe 10-ish%. and more optimistic scenarios. However, if this statistic doesn't scare you at all and you would not rather lie to yourself further by watching some delusional trader on TikTok show Lamborghinis bought with a signals, then keep listening. Trading is not quick path or something you can learn in a month or even a year, whatever. Truly understanding the market takes years of practice, testing, and mistakes that may end up costing you more than you're willing to risk in the beginning. You will not find easy answers or simple rules here. The learning process is a bit like wandering in the fog. You can try copying strategies from YouTube, use indicators, or blindly follow the guru's signals, but this is just waste of time. In fact, most of what you find on internet is done to trick people new to this world into buying courses rather than to actually teach you something if you didn't know. There are no ready-made recipes in trading. There is no one universal system that will work always and everywhere. You must learn to think for yourself, develop your intuition and subjective assessment of the situation, and that is something that no one will do for you. There are no teachers in trading who will tell you exactly how to act, etc. There are only hints from which you must draw your own conclusions. So if you still feel like you want to do this, you have to accept that it's a long road. That in the beginning there will be more failures than successes, obviously. But if you persevere, you might actually become one of the 5% who actually make money. Listen, I know this stuff might sound depressing and I probably sound like a total asshole when I talk about certain things in a certain way, but I really want good for you. I don't want you to be broke, out of money, out of hope, and destroyed. And you can pretty much get there pretty quickly by not applying those things that I'm telling you, okay? Reality is brutal, so stay positive. Smile. I'm serious. Smile. It will be good. Never lose faith. And you know what I'm talking about.